All right. Good morning, good afternoon, hopefully not good evening, depending on where you are around the world. Welcome to this week's Business Times Nigeria Weekly. If you're just joining the podcast, this is a weekly podcast where I go through key business and economic headlines that occurred in the outgoing week. And with me today, I have Oluwaseun Ajong Law. So, hi, Oluwaseun. Good morning, and thank you for joining me.
Hi, Onome. Thank you very much for having me.
All right. So let's get into it. We have quite a lot to discuss. I would start with Zenith Bank numbers. I was wishing, in fact, all through this week, as I usually would do once the numbers are out, I was waiting for, are we going to have an earnings call this week? Is GT going to have an earnings call this week? Because for those who don't know, there is um, there is some sort of, I would say there's some sort of healthy rivalry between both entities. Um,
Yes.
and it's not rivalry spurred by them. I would say it's more of rivalry spurred by the investing public because in some ways, yes, you have five tier one banks, First Holdco, UBA, GTCO, Access Holdings, and Zenith. But the real outliers have tended to be, or where there's more competition, has tended to be between Zenith and GTCO. And it's an interesting game because the Zenith camp would say, hey, we are the biggest by revenue in the country, we're the biggest by profit. The Orange Bank camp, you say, look, well, we have a better ROE. So at the end of the day, what do you want? Do you want big revenues or big profits? What of your ROE? So there's always that rivalry between both of them. So in any case, last week, a couple of days ago, Zenith Bank dropped its audited financial year 2025 numbers, and the numbers are they're pretty okay. 4.1 trillion naira in gross earnings, 1.04 trillion in profits after tax, and earnings per share of 25 naira 32 kobo. Maybe it's me, but let me know your thoughts. I didn't see as much excitement with the final dividend of 8 naira 75 kobo compared to GT. I mean, there's always excitement with GT. In fact, GT, and I remember saying this on one of the podcast episodes, it was the excitement I saw on Twitter about the previous year's dividend that GT paid. I think it was 8 naira, around 8 naira. And I saw a lot of people
So,
excited. I saw a lot of people excited on Twitter. And this was the first time in a while I'm seeing people really excited about money and the dividend on Twitter. So that let me know, okay, we had retail participation. So like, okay, something's up. So what are your thoughts about the numbers? What numbers caught your eye in the results?
okay, thank you very much for the question. If you look at the full year audited numbers for both banks, both released impressive numbers, coupled with the fact that they also released a good dividend per share for returns to shareholders. If we look at numbers critically, we'd see that for Zenith they had a huge impairment in itself, kind of, I think, dragged down their profitability a little bit. What we might likely see, that in itself, I feel that in itself played a critical role in affecting what was the eventual payout for the bank. And we also know that Zenith in itself has a good risk management approach in terms of what it pays out. I think it paid out around 30 to 32% in its payout of its EPS. So that's more or less like a good approach, a good management approach in terms of cash flow. Because I checked their cash flow, their cash flow was solid and impressive. So to an extent, I think they were quite conservative in the amount that they paid out to shareholders. Looking at it from also the aspect of dividend per share growth, we saw that there was a 100% jump, significant. If you look closely between 2024, 2025 numbers between both banks, there was a huge FX gain that GT recorded last year, 2024 compared to 2025. I think that kind of boosted their dividend, which they paid as at 2024, because they paid 8 naira. If you look at the jump was recorded for GTCO 2023, 2024, and that in itself was what triggered that rally in their, because if you notice, there was this huge distance, huge gap between what GT was trading at and what Zenith was trading at. We usually look at them as close pair comparative and close competitors, as you rightly alluded to. And we are beginning to see that once again play out in terms of how where their trading price and numbers are. And looking at their numbers, we have started seeing accretion from what's it called now, the impairment charge that GT Bank recorded the preceding year. We have started seeing some level of recoveries on those impairment that was recorded. We should see that play out in Zenith Bank's 2026 numbers, and that in itself gives me a more positive outlook on Zenith Bank's numbers in terms of what exactly their bottom line will be going forward in by the end of the year.
Okay. And then still sticking to impairments. I was looking at the numbers, looking at the 5 year history, and you'd say maybe this is the third straight year you're having really, really high impairments for Zenith. I mean, it's a sectoral thing. Yes, you could argue that okay, you've had this problematic oil and gas loan sector-wide, which I'm not going to mention because I guess the last MD that went hard, or the last bank MD that discussed it, had a lot of heat. So it's one of my favorite bank MDs. That the next call he did, he avoided mentioning their name. So I'm also going to be like him. So yes, you could argue that that oil and gas loan was problematic across industries. Banks have had to take haircuts on that loan. Yes, you would say, and everybody agrees that when it comes to risk management, I might say some of the best risk management banks in the industry. It's probably a almost identical race between GT, Zenith, and Access Corporation. But for me, the pessimist might wonder that look, this is the third straight year of really high impairments. Um, is is this is this the new normal? I mean, obviously, there's no way we're going to have this 700 plus billion in impairments this year. But I'm just wondering, maybe just playing devil's advocate, if if this doesn't go down, and then some would say it's a testament to the strength of the bank, that the fact that you could have impairments of 700 plus billion and you're still doing a trillion in profit after tax. Um, do you think this is a new normal? You would notice that even though they didn't allude to this, you see that you've had around that area key management changes and all. So do you think this is the new normal for Zenith? Can we see Zenith go back? Because 2023, I think they had 300 and something billion or 400 and something billion in payments. 2024, I think it was around 500 or 600. So if you add up the numbers, you're looking at a trillion naira in payments, over a trillion naira in payments the last 3 years. There's another bank that has been probably is notorious for impairments. I'm not mentioning names. Those who want to know the names, drop in the comment section. So my worry is, is this the new normal? Do you think that they can bring this under control? Are we done with the cleanups in the banking space?
I think to a large extent, yes, we are. This would not be the new normal in terms of the impairment charges that banks record. One, because of the fact that the 2025 circular by the CBN in terms of them writing off what's it called, forbearance loans off their books, and also keeping their NPLs very, very significantly low, below the 5% threshold. And secondly, we also saw the circular from the CBN, I think this year, regarding the stress test that is going to be carried out on banks, that if whichever bank fails the stress test, they would have to go another route of recapitalization in also to increase their capital buffer. We have also seen the capital threshold has been increased by these tier one banks, and looking at it from a holistic standpoint, the banks are seated in the best positions to actually carry on their day-to-day banking activities, and also the fact that now because of the activity of the CBN is now much from a proactive standpoint. So we are seeing that banks are now taking their risk management approach very, very seriously, and trying as much as possible to significantly deleverage their risks. And this in itself would help in terms of what they are going to be recording in terms of their impairments. We are seeing that a little bit of they are cutting down their exposures in oil, some certain oil and gas, and now more or less like we might likely see funding now going into the real sector, even though we still see this the fact that yes, there's this sticky high interest rate environment, which is still like a cause for concern. But what we are likely going to see, and as if you look at the numbers, if you look at the numbers of the bank from their 2025 year earnings, we are seeing that the rate at which loan to customers actually grew was low. I think Zenith Bank GTCO actually increased theirs by I think roughly around 2% from last year, despite the fact that their asset base grew by I think around 20% thereabout. We are seeing that banks are now much less like increasing their risk management position in terms of how best they allocate their funding mix and also allocate their capital. So in terms of the impairment, we would see impairment drop going forward as into 2025, 2026, 2027, and simply because of we also be seeing some reversals as a result of recoveries from some of these loans that they are previously written off.
Okay. Then I've seen some expansion moves. I think it was France last year. Yes, I know there was some events any bank had in France. So I think there's a branch in France of Paris. There was East African news that came out a couple of weeks ago. Um, is it worth it in your opinion? And I ask it this way because when I mean I've not looked at UBA is yet to drop FY 2025 numbers, but when you think of it, UBA is probably in the real sense of it, UBA is probably the maybe truly the Pan-African bank because you have in here 50-50 split um, between revenues and I think profits. Yeah. Um, then for the rest of the banks, I mean, we look at GT numbers. What do you have? You have Nigerian banking operations, lion's share of revenue and profit, and after that you have Ghana, and I think then you have Liberia. So to some extent, Nigerian banks have cracked West Africa. We've done fairly well there. Mixed, they've cracked Europe, well, London, and yeah. But East Africa, I mean, I get the play from a regional perspective, which is we say, look, I'm going to take a decade to walk this through. Um, I expect that East Africa will have solid growth in the next decade. That's a fair assumption. But is it worth it? And I'm somewhat pessimistic because when you look at GT, I think GT did a greenfield operation. I believe they built the out from scratch. They didn't merge. Um, the numbers kind of look suboptimal in my view. And then when you take take access is just a whole conversation for another day. Maybe whenever access result comes out. But do you think this East African play is worth it? Because I would argue that look, you're doing pretty decent in Nigeria and West Africa. Um, wouldn't it make more sense to just simply retain that money or expand here? why do you think this Kenyan play is worth it? Is it worth waiting? Because they look at the growth. I'm looking at the numbers for I believe it's I have it here. When you strip away Nigeria, Ghana, West Africa, the other numbers are pretty small. So do you think this East African play is worth it? What are they seeing there? And should we expect that they can do better than other
Mm.
players that have tried that
Okay.
expansion?
Okay, so for the East African expansion, in my opinion, though, this is just my own opinion. In my own opinion, I strongly feel that the move to East Africa is actually worth it. Even though breaking into that market might be quite hard because of the fact that we have large increased banking penetration in those regions, and also we have significant players who have deep pockets in those regions. So I strongly feel that it's worth it. If you critically look at what was that? There was a bank in South Africa that purchased an acquisition stake in. Was it? It was not. I think it was Hapsa. No, no, it was not Hapsa. I'm trying NCBA. Yeah, NCBA. Yeah, the NCBA acquisition by a net bank. Yeah, yes, net bank. Net bank did that. If there's something actually that these banks are seeing, and we also saw that Standard Bank in itself took I think a 5% stake in Nedbank as a result of that, something around that and around that news. And then we also saw that UBA in itself, UBA Kenya, as if you remember 2025, the I think the Central Bank of Kenya increased the
Capital
started
requirement,
the
yeah.
organization process for the banks from to 1 billion, then subsequent eventual 10 billion shillings thereabout. And we saw that UBA in itself, apart from the fact that they posted strong earnings, like a significant earnings for their Kenya subsidiary, they have surpassed they have ramped up their capital requirement to actually meet this threshold. What are we seeing with these banks? If you notice, Access also acquired NBK in order to deepen its penetration into the Kenyan markets. What's it called? Now we saw the news with Zenith Bank acquiring Paramount Bank, and I looked critically at the numbers from Paramount Bank, and I discovered that, since 2021, 2022, 2020, 2021-ish, they have been largely profitable, returning roughly around I think their 2025 earnings was around 333 million shillings thereabout. And that in itself, I strongly feel that in itself, it's going to be a instant value addition to the bank. What are we seeing with this acquisition? It's more or less like an inroad into the Eastern African market, because to be honest, the Kenyan market is still like largely one of the most developed markets in that East African region, and that in itself gives them access to that corridor. We are seeing large bulk of this bank try as much. And if you remember 2020, I think 2024 or 2023 earnings call by one of the top banking CEOs, where he said, yeah, I think it was a right behind the offer. He made mention of the fact that there is nothing in the Southern African market, which to be honest, my own view, I don't have a view concerning that. I'm on the fence concerning the Southern African market, but the East African market and the Western African market, these two corridors are still um, economies whereby they are still fast growing, and also to bring up more value addition to Nigerian banking ecosystem. So, in my own view, I feel it's a good move to one also diversify the revenue base of the banks. If you look closely, 2020, 2021, 2022, this were periods whereby banks who had uh, only positions in naira saw the 2023, 2020 outside Naira, and this in itself significantly grew their balance sheet bit and also their earnings. So, in manners of maybe what's it called? Risk earnings diversification, and also currency hedge. So I strongly feel is a good move in terms of how best the bank is positioned to take charge in future years.
Okay. Then coming to the pricing, and this we just round up GT and Zenith. Yesterday's closing price of 112 means that Zenith is trading at P ratio of 4.43 times earnings and the price to book ratio, a price to book value of 0.9 times. So I would say, is this stock still a buy? And I'd ask because um, there's with the retail investors, there is this hesitance once they see that any stock is 100 naira. So, I'm not interested in, let me look for something that's 10 naira or 20 naira or 5 naira. So, do you think, I mean, obviously, numbers say yes, but if you are sitting in front of a retail person and you say, look, this is 100 naira and there are banks that are 10 naira, 20 naira, why is it still worth it? And because there's a school of thought, I was arguing with someone that, look, these stocks are trading at what, maybe 1.1 times, 1.3 times book value. And when I look at the equivalents, I know it's a fast scratch, but when I look at the equivalents in the US, I mean, if you take the top five banks in the US, I'm sure most of them, except maybe Bank of America, they're all trading close to 2 times book value. So is that a scenario you see playing out here? Are these banks worth trading at maybe 1.7, 1.82 times book value? Is it still worth buying? Is there still upside? Now, exclude what's happening around maybe global macros in Nigeria, and local macros and FPI flows, which will have the effect. Just taking them individually, are these two stocks still worth buying at a 100 naira plus a share, and which would be a better pick between GTCO and Zenith?
Okay. I think first we need to give credit to the would I say the risk management or the the efficient utilization of capital by the banks. Because if you look closely at their numbers, you would see that there are so many things that in itself wouldn't ordinarily, if these banks had at their disposal, would help them boost up their earnings far more than what they have done. Take for instance, they have encumbered deposits with CBN. They have what's it called, the banking cost, which is taking around 20%. That's the NDIC and premium, and also the AMCON
Yeah.
charge, which is over 20% of their operating expenses. So this in itself, it's more or less like things that cause drags on to their profitability, and yet these banks are still posting significant earnings. The fact that yes, we have what's it called, a high CRR and also a high NPR, which is one, maybe like the NPR rate is one of the reasons why our banks are posting significant numbers in terms of their interest income earnings. Some might allude to that fact, but we must also give credit to them in terms of how best they have also been able to optimize. So are these banks still a good buy? In my own opinion, yes, they have. If you look at Nigerians are very, very, especially retail investors, they are very, very happy. They are very, very inclined to buy stocks that actually give them one immediate gains that actually translate into actual money for them. Let's look at the trajectory of how these banks have actually moved so far. Based off of the last 2024 was when Zenith Bank did their hybrid offer. That was around 34, 36 naira. I think that's 6.5 naira ish. And now that was 2024. Now it's currently trading at 112 thereabout. And if you look at this, this is almost 3x it has done. And if you look at it from what's it called, dividend play perspective, year on year, I think five. There was five. There was 10 naira this year, and also preceded to that we had I think a 3 naira. So there has actually been one cash return to shareholder and also capital gain return to shareholder. So to an extent, large bulk of the money that these banks have also raised have not been actually fully deployed in that sense because some of these funds are largely been sitting in treasury bills, invest financial securities, and thereabout. They have not necessarily deployed this funds into funding critical sectors of the economy. So I strongly feel there's still much more legroom for these banks. Also, the fact that if you look at what Zenith Bank is trying to do, we saw the move into Manchester. Zenith is still the only bank that I think, to an extent, has what's it called? I think more than one branch out as in the UK. I think itself an Access Bank. I don't know thereabout. But if you look at that, they're trying to move into Cameroon. Also, there was a news that they were trying to move into Cameroon. Then the acquisition of Paramount Bank in Kenya. This in itself is more or less like showing that the bank is proactive in terms of one diversification of its revenue stream and also growth potential. I never would have expected that Zenith Bank would have gone the route of acquiring the bank because it's more or less like it and GTCO. They are closely banks that more or less like start up their own entities there, but instead of the access acquisition route. So these two banks, they are still trading at roughly. I think GT is trading at 1 point is book value. Zenith is trading at less than 1% is book, so 1x is book value. So this in itself gives more room for growth. It's relative. What's the word now? In terms of its relative peers, I think to an extent, these two banks are one of the efficient banks in terms of how they run their system. And if we look at the growth trajectory for this bank, the growth trajectories are still positive. And the more the company grows, the larger the dividend largesse that are close to shareholder. And this in itself also have a way of affecting share price because people are pricing in these earnings into their share price. So there's still much more leg room for growth in terms of in the eventual future. We have seen also, I think the only risk, the only concern for me in terms of between these two banks is the aspect of for GTCO is just that concern for me. GTCO, we haven't seen much of a leadership change in GTCO, and in terms of where exactly, I'm fascinated by what the CEO says in terms of the growth numbers, the growth trajectory, and the outlook for the bank. Well, I'm also concerned about what happens when he leaves the helm of affair of the bank. And Zenith in itself has proven that time and time without number with the changes in their CEO, which we have had. Even though we have their chairman still backing, and also we are these are just the concerns I have concerning this bank. But in terms of their numbers, in terms of their growth trajectory, they are still looking positive in the mid to near term, and what the share prices are. There's still much more room for growth for these banks.
Hmm. Okay. Okay, so that's it for the banking. So let's look at the news of Nigeria being included in the FTSE Russell index. Now, I mean, as finance bros, we get the gist. But I would say to the layperson, some might ask, why should I care about this? What's the big deal about Nigeria being reclassified from unclassified to frontier market? Maybe we can dive back a bit by even asking what is a frontier market why should we care about these indexes? Why do they matter? Yeah.
Okay, so for the inclusion into the frontier market index, why these things matter is because of the fact that if you remember, before let's look at it from um, going back as far back as 2015, 20, this were times when we had a huge influx of foreign participation in our market, and that in itself has significantly declined, which we saw the years in which our markets were largely suppressed and largely undervalued because we this by foreign participation. Inclusion into this, what this in itself would actually drive is it will drive investor participation from markets outside of Nigeria. It will also drive participation from foreign investors because there would be would see a renewed level of interest from big capital players who would also want to play in our market, and this in itself would drive not only drive participation in our markets, as we have seen increased participation from local participants, but it's also drive participation from foreign investors. This is also going to drive up valuation of our listed companies and listed entities on the NGX. And what this would likely do is this would, for people that are current holders of positions in some of these positions that would see these guys come to play in, it will be more good significant capital appreciation in terms of what their holdings are. Why we feel this is a good move is the fact that our companies traded on the NGX would now be trading more sometimes at fair value, and also they'll be trading at good comparative numbers compared to their peers. We would also see increased participation in our market, and this would expand the depth of analysis in the market. So this in itself is a quite good move for the market and also for investor participants at large.
Okay. All right. I totally agree with you. I just have to have you go to this rabbit hole because I think for an everyday person, they might wonder. I mean, there's always arguments people have that okay, fine, we've fixed exchange rate liquidity. We've to some extent that has been sorted by FPI inflows into government securities and all that. What's left is for the fiscal side of things to also keep their own side. But that's a longer term thing, and that has yet to play out. But well, monetary is on the outside. So yeah, all in all, it's a good thing. Do you think our market is overvalued? I was looking at a 25-year, yeah, I was looking at a 25-year chart of the Nigerian stock market. And I see that we've had 7 down years, I think. Yeah, 7 down years and 18 good years. Last year, I think we did the Ultra Index did about 50 something percent, 50 or 51%. This year we are up by 6%. So I'm sure probably those that held the last maybe 5, 6 years probably are up net with around 100 something percent. Do you do you think our market is overvalued as one? And two, we Nigeria tends to operate in cycles. So you have boom bust cycles. Clearly, I don't know what stage of the boom we are, but yeah, in the boom cycle of some sort. So the question is, how long do you think this boom cycle would last?
Okay, so first would be, do I think our market is overvalued? Absolutely not. I don't think our market is overvalued. Why? Because the market is largely driven by local participation, and local participation in this sector, we're talking about institutional investors and also retail investors. I was looking at what's the trajectory of what the PFA asset has grown by, and also the outlook on what the PFA asset will grow to. And I was more or less like wowed by the significant growth in what I saw. And these are things that these are one of the huge players in the capital markets, in the equity market space. And aside that, they see this increased participation from the retail players. We are seeing more of digital platforms that are enhancing how best people take advantage of, because it's gonna be right before, let's say, if you look back from, let's say, 2020 to 2022, I think there was a report that went out that said that around 600,000 people have have an active stock trading account there. And that number in itself now would be seeing um, that number would have increased significantly, because we have seen how year on year some of these digital platforms like Bamboo, Meristem, AfriInvest have actually been what's it called now, opening new CSS accounts. And this CSS account, we have been seeing more increased. We have been seeing increased participation from both retail and institutional investors. With this in itself would actually still continue, because of the fact, off of the back of one. But the companies on the NGX are releasing stronger earnings. Yes, there are some companies that because that are that are largely overvalued, because, to be honest, no fundamentals are backing them, just pure sentiment and vibes. But we have the presence of large conglomerate and large good tickers that are still fairly priced at valuations that are quite low, and we'll still see increased participation in these numbers. And if we now witness an increase, our local participation still beats foreign participation significantly. I think it's 70-30 or 80-20 bandwidth there about trying to I don't have the actual numbers. And once we now start seeing an increased participation because of these reforms, because of increased numbers, and if you also look, if you also follow closely the fact that I think Zenith also said they wanted to list on what's it called, the
London
London
Stock Exchange.
Stock Exchange. If you look at the numbers, for what's the word now, in terms of what what they listed at, and what they paid out in terms of dividend payout, people that took positions in those on their market will be like, oh no, this is a good move compared to their relative banking peers in terms of what they pay out. So I strongly feel that we'll still see, aside, that's even aside banking, we'll still see what's it called? We'll still see positioning. We still see more leg room for growth. If you look at Arade just concluded this, what's it called now, the acquisition of the 40%, additional 40% of ND Western, ramping their total asset base from around 1.4 trillion to 10 trillion thereabouts. And this in itself is a good move. What exactly are we seeing for some of these oil and gas, be it oil and gas ticker? Now oil prices are trading above. I was even doing an analysis sometimes beginning of this year, comparing some of the oil and gas tickers listed on the NGX in comparison with companies listed in developed market, and I saw the steep difference between this. And what are we likely going to see? We are still likely going to see what's it called now, increased participation in some of these numbers. MTN, in terms of their companies in the industrial space, we are largely going to see more increased participation. So in terms of whether the market is overvalued, to be honest, I still feel the market is just fairly priced, but not overvalued. Sorry, can you remind me of the second question once again?
How long do you think this cycle will run? I mean,
Okay.
clearly we are in an up cycle. How long do you think this cycle will run?
Okay. How long would this cycle run? I was reading several reports by analysts from different houses in the market, and every one of them has largely alluded to the fact that would the markets would get a minimum of 35% base return for the NGX ASI. And to be honest, I quite agree with the standpoint also, which is one because of what we are likely going to see in H1, apart H1 earnings, and also actions announcements we'll be expecting H1 2026. Okay, when I call out actions and announcements in terms of one, we're expecting the Dangote refinery listing, and I think there was a SAP. I saw a post there by the NGX that they all said for the African market operator, we had Nairobi, we had Johannesburg, and I think we had Kenya. Sorry, that's Nairobi, Johannesburg, and one other market I can't really remember. And to enable cross-border listing, this in itself it's more or less like good initiatives in terms of price discovery for the refinery project. And once that's in itself, there's more or less like an increased level of what's the word, anticipation, yeah, anticipation for that listing. And so you know how was the rush for some of these stocks, what exactly is going to do is going to drive frenzy into the market and all of that. And for corporate earnings, for some of our listed companies are in the NGX 30. Majority of them started, there was a rebound 2025, and that rebound started maybe mid of the year. Then 2026, we've seen that in full force. We saw the acquisition of Chivita by USC, and
USD.
we expect that to actually the revenue from that to actually accrue in 2026. The post consolidation of MD West and for RD, we expect that in 2026. Also the ANO gas pipeline, ANO gas coming on upstream by Seplat. We expect revenue accretion from that aspect. MTN in itself, in terms of its fiber inroad, and also data center issue. There's largely a whole lot that we are expecting from some of these tickers that are listed on the NGX, and their H1 2026 earnings, Q1 2026 earnings would actually would put some of these things into more perspective. So in terms of the rally that we are still seeing, I don't see it stopping anytime soon. Yes, there's the post-election, the pre-election bias that many people might say, yeah, but as it stands, there's I don't think there's actually any upset that we might see in terms of what exactly is the outcome we are expecting for the coming election. The policies and reforms that are being issued are actually to an extent the markets accept those policies in good light, and these policies are good for the market actually. And what are we seeing concerning some of these policies? The policies are actually driving participation. These policies are actually driving increased what's it called, renewed interest in the market. And then lest I forget also, I think by 2026 also we should also see improvement in the cash flow earnings of our Gencos, and also of our Gencos, and that in itself would actually feed into the earnings of the because of the NBET bond issuance now. So we will still see large bulk of all of these things play out in their H1 2026 earnings, and the rally is not stopping anytime soon. For 2026, post 2026, I actually don't know what exactly might be the outlook, but for 2026, the outlook is still actually positive.
Hmm. Okay, so let's end on a somewhat soft note. Aliko Dangote, Ali Cash. I like to say one of Nigeria's most popular Alajis. So when you say Alajis, Dangote is probably top three at least. Turned 69 a couple of days ago. Um, which I mean, there are two camps when it comes to Alaji. Either you're a critic or you're a supporter. You're maybe in between. So critics will say, okay, I mean, there's a oligopoly along other players in cement. Some might say, can we have a bit more visibility with the refinery? He's tackled regulators. I was joking with someone that 2026 might be the year we might see Dangote appearing on podcasts anytime soon because he's never been so vocal. And he even Dangote will always joke. I remember what there is a talk he did at the Lagos Business School some years ago. That it was when he got into manufacturing, he started to gray heavily. And I suspect that the refinery has probably given you guys the most stress in the last couple of years. So turned 69 this year. Whichever way people feel about him, you can't but argue or acknowledge the fact that he's he's a major force when it comes to industrial Nigeria, just for that refinery. But for me, I'm just wondering, he's 69. I don't know, maybe God giving him good health to be around for that, 20, 25 plus years, maybe 30 years, who knows? What do you think? And I'm sure he has it somewhere in his pocket, but I'm just wondering, um, what do you think drives him? Because with all, I mean, I would expect that, he always had this joke that, at a point in time, he wanted to buy Arsenal, then the refinery came up and, he got busy. What do you think is his driving force, one? And how do you think succession will play out? Because he has a massive empire. I dare say that from a finance perspective, um, Dangote Group DIA is probably what's the word, a significant obligor to literally every bank in the country by virtue of its refinery and other businesses. So, what do you think succession would be like? And when you look at probably all of Nigeria's top billionaires, especially those in the industrial space, succession, I mean, they're still very much fit and running things. So I guess that's like maybe, I mean, he's 69, could probably run this business for another decade comfortably before deciding to step down. But I'm just wondering, um, what do you think drives him and how do you think he's going to handle succession?
Okay. To be honest, the that's the man called Alaji Aliko Dangote has been one of the persons that have largely been instrumental to Nigeria's industrialization. Yeah, we can call him names. To an extent, not. I would not say. I'm quite impressed by his thinking. Is one of the, would I say, is a smart mind. You have to give him that. It's a very, very smart mind, and in terms of how he plays his business is quite savvy in terms of how he positions himself in industries and also where he plays in. It might also interest you to know that I think there was a time that he had a bank, and I'm quite curious as I was quite curious as to why this man sold off anything. He left the banking space, but looking at what he has been able to do and he has been able to achieve. What I've seen so far is that he largely plays in positions in industries whereby one, there's a significant chunk of capital outlay that is required, and um, in terms of upsetting the current dynamism of what he has laid down, might be hard for a new entrant. So let's look at sugar. Sugar is one aspect whereby its entity is now recording losses, has recorded losses for the past 2 years, and which is because of the backward integration process they are trying to infuse into all of their process. And I'm held by these innovations and this creativity that he tried to as much as possible help, because in a wider sense, it helps in terms of what's it called, employment that is being created, the end-to-end value chain process that is actually being unlocked also in this process. If you look at cement also, the backward integration process has been largely enhanced. Yes, there is the aspect of the pricing on cement bank as on cement banks bags are significantly higher compared to other African markets. But in terms of what he has been able to achieve, and the scale at which he has been able to achieve it at is mind blowing. Now with his inroad into the refinery project, I wouldn't be surprised if I know he has some oil assets. I wouldn't be surprised if eventually after the whole refinery process is unlocked, and the next thing he's doing is acquisition of oil assets sequel to the one he has, in order to manage it, because that's one thing that I know for a fact in terms of how he thinks unlocking the whole value chain process in him for himself. That's one of the ways I've seen him play across multiple sectors. He likes to own the whole in backward, the whole integration, the whole value chain process that that actually affect his business climb. And when you look at it in terms of what is exactly his driving force, we could say maybe I would not say I think the scale of impact, because if you look at it closely, aside the fact that now he has been able to unlock that almost every household uses item, he has now moved to a situation whereby it becomes a dominant force in terms of the economic situation of the country. Look at the scale of the refinery project. The refinery is 650k capacity, with plans to ramp it up to 1.4. That in itself is goals that are very, very audacious. And looking at every other active participant in the market that has a refinery, not dormant facilities. I think the maximum we have is around 50k. I think we have 11k, 20k, and all of that. And he has been able to cut through all of those noise to go straight to 650. It's quite, these dreams are quite audacious. I also heard of the fact that he wants to go into steel after completion of that refinery project. This in itself are huge capital intensive project, and he's one of still the only persons that can pull through with these things, and he's putting his money where his mouth is, and I think I kind of like that one individual, because he has been able to look at it from the aspect of risks and return, and these are things that will bring an S for him significant return. So I to an extent, I kind of appreciate that about him. Force. I think to an extent, those are things that kind of driving the scale of impact that he's able to make, and also entrance in the market to an extent, because if you look at where industries is playing in, these are industries where we largely don't have what's it called? We largely don't have people who are dominating that space, dominating that market space. I won't be surprised if maybe after some time it delves into car assembling and production full time. I largely won't be surprised, because if you look at that space also, that space has been largely docile. We have not actually had a significant player in that market space, and this in itself is one space. I also feel that other people who has his level of access to capital should be looking at, because that in itself will drive the scale of industrialization. Where, however, large bulk of these industrializations are still aimed on access to power and also that in itself. But because of the scaling which he wants to play, large bulk of his projects are actually he has power plants for every one of these. Um, I was looking at the capacity of I think the Obajana cement plant. The Obajana plant in itself, the power plant in Obajana cement plant is actually, if not close to what the current capacity is. Geregu's power plant is, what's it called? The capacity of Geregu's. Well, that shows you how this guy in itself has been able to, what's it called, deploy his capital into, not only owning the whole process by himself, but also um, end-to-end value chain, end-to-end integration process. It tries as much as possible to. So I think in itself, the scale of impact is quite good for things that you do. And in terms of succession planning, I'm sure this guy has that succession planning on that lock. Um, we saw what Bua did with bringing up his son into the what's it called, the Bua Food conglomerate. Dangote doesn't have a son, and it's his daughters, and I think Fatima or Halima is always regarded as, I think, the Iron Lady or there. We have seen these ladies in terms of powers in his company. You find them on the board of NASCON, on the board of Dangote Sugar, and on the board of Dangote Cement. One currently is handling the Dangote family office business. And if you look at our best, I was reviewing the ownership structure of all of Dangote's company, and something piqued my interest, and that's why I know for a fact that this guy has a succession plan in place maybe long before he clocked 50. He established his family office in UK. I think that was 2020, 2022, 2023-ish. And if you look closely at the ownership structure, you'll see that the ownership structure is, Dangote Industries Limited. This is the ultimate controlling entity that owns large bulk of the stake in all of his business. On top of that, we have a company called, I think, Greenview Holding Company in, I think, in Cayman Island. I think on top of that, there's also a trust that actually also holds those assets. So if someone already, somewhat already has more or less like something close related to a trust, he has established a family office, you should automatically, succession planning is almost something he has already put in place for his business. And the only downside, the only challenge I see in his entities are, we have seen that large bulk of these businesses are run efficiently with Indians at the ends of power. I think to an extent, if there is a if there is a synergy and harmony with both the Nigerian operators, I think if there's a good synergy, I don't see any what's it called, any potential what's it called now, face off in terms of how the companies have been run. So I strongly feel that he has this succession plan in place, and that might be in motion if on the aspect of his demise. But I actually salute his mindset and also approach towards industrialization.
Oh, okay. On the lighter note, I'll end with this. I remember a few years ago, I'm sure he doesn't have the time now. I know he used to say, look, occasionally he would drive himself around Lagos. So that tells me that he has a driver's license, a valid driver's license. And I know, I don't know if it has changed, but I know that the terminal age to have a driver's license in Nigeria is 70. So it means that from next year, I guess, except maybe he gets some exemption, it means that from next year he will no longer be driving if he's still driving. So if you're in the comment section, let me know if he still has the driver's license. Anybody in DIL, let me know. Does he still drive himself? Uh, is he going to buy us now when he becomes 70? What does he want to do by then? I think someone should ask him. So thank you, Oluwaseun, for spending the time with us. We should catch up again. There's lots to discuss. Hopefully, I hear whispers that the refinery is going to the refinery listing is obviously close by with all we're seeing, and then it's going to be a momentous one. I have my thoughts on that, but we'll probably discuss that when it's listed. I wish that fertilizer, I'm more interested in fertilizer because the profit margins is better in fertilizer than oil refining, but we'll discuss that when it is. So thank you for showing up. Thank you for everyone who's listening. Don't forget to like, share, subscribe, and let's catch up again later in the year.
Yeah, thank you very much for having me.
All right, bye.